2012. In fact, the group beat the S&P, and it's beat it over the last 4 years. My next guest says your portfolio should include investments in real estate in general. He says one of the best way to do it is, REITs. Joining me now, United Realty Partners Chairman and CEO, Jacob Frydman. And, Jacob, REITs have been something that there were so many investors back 4 years ago when the group started to turn that strong performance that said that commercial real estate was going to fall apart. The opposite happened. But can that momentum continue, do you think?
Well, I think the momentum in real estate investing in general, I think can. There's still great buying opportunities in many markets today. Commercial real estate is still available at discounts to the heights of the market in 06 and 07. And real estate is a hard asset. So when you think about the fact that we're at very, very low interest rates today, you're able to finance these cheaper acquisitions with incredibly low interest rate debt. And in the future, interest rates are going to have to rise, which will probably yield some sort of an inflationary cycle. And in that situation, you want to be in hard assets because they will hopefully retain their value and possibly even grow in value.
There's different types of REITs. I mean, there's healthcare REITs. That would be like, say, old folks' homes, for instance. That's one popular type of baby boomer generation. Another could be strip malls, for instance, shopping malls. So what kind of tenants do you think should be into the REITs that we're looking at to invest? Because we can do our research and dig into this. If we
want. Well, any investment, whether it's in a real estate investment trust or it's in a corporate stock or in any other entity, obviously has a series of different risks and different appetites. So the investor that's looking at possibly investing in any investment should be aware of the assets that are in that portfolio, should certainly be aware of the management team.
Do I have a Best Buy that's got a long-term lease in that shopping mall, for instance?
Well, we talked about retail space once before on the show, you and I, and my personal view about retail space is that we may be over retail in the United States right now, but certainly retail can be bought at a bargain price in some markets. But overall, I think that one needs to understand the underlying assets and what their risk tolerance is.
We're also we looked at some of the apartment REITs as well. I mean, there's so many different varieties. I mean, what do you make of that space? I mean, we seem to be seeing a surge in home buying because of low interest rates. Would that be bad for companies that have been building multifamily units, apartment companies?
Well, there hasn't been all that much building of multifamily, which is what makes the space so interesting, right? The multifamily space has benefited from the fact there's been a tremendous amount of foreclosure in this country of residential homes. People, therefore, have increased the demand to rent. There hasn't been a great deal of construction in the past few years. You probably will start seeing some additional construction. But because of that, rents have typically gone up and have provided the kind of yields that some of these REITs are able to now provide.
How regional do you think that I need to go if I'm looking at REITs right now as an investment?
Well, I think it depends on what your tolerance is for asset class. You have to decide whether you're looking for net lease type assets, which is one type of lease, which is one type of REIT. That really is a play on the underlying tenant and what the yield is. There's people who invest in value-added and opportunistic real estate. So it's the entire spectrum. I think an investor has to make their own decision, and an investor should look very carefully at the prospectus for the risks associated with it.
Almost 20% of a return for 2012. The group has done very well. Jacob Frydman, thank you very much, Jacob. It's good to see you again.
Thank you so much.
It's one of my favorite topics. All right, 1:45.